Hi, I'm Tom Elliott and this is another financial markets update for Hodges Real Estate. Well, the end of the financial year has just gone past, and to be honest, the 2011-2012 year was one to forget. The share market was around about 10% lower over that period. Property prices were flat at best, especially on the eastern coast of Australia. The world went through a number of financial crises, not the least of which was what was going on in Europe, more on that later. And of course, even here in Australia, we face the prospect that the Chinese economy might finally be starting to slow. Well, as we know, during the last few months, the Reserve Bank has finally seen the error of its ways and has started cutting rates. Now, right now, the rate cutting is on pause because I think the Reserve Bank, as always, likes to see what's going on. And I'll maintain my prediction that I've been making over the past few months that interest rates will be cut around about another 50 basis points. So we'll see official rates around about 3%. What the big banks do is, of course, anybody's guess. They're desperately moving to try and shore up their profits at the moment, but I reckon they'll pass on 30 to 35 basis points, at least to home borrowers. Now, I mentioned the European crisis before. As much as it appears to have been dealt with in the short term, it hasn't gone away. All Europe is doing is conjuring up literally billions and billions of more euros and trying to bail out countries like Spain, for example, in the hope that this stops the crisis and that we won't see other countries, most notably Italy, also needing a massive bank bailout. Frankly, I think the best case for Europe is that it simply muddles along for the next few years. Now, the world is already pricing this into its expectations, so if my prediction is correct, it's nothing to fear. What I don't think is going to happen, though, is that we'll see Europe providing an engine of growth, if you like. That's going to have to come out of Asia and out of the American economies. Let's talk about America. The fact is, the US economy slowly but surely appears to be gaining ground. The rate of unemployment is falling, and more importantly, I think property investors need to look at this. The construction and sale of new homes in the US is finally starting to pick up after 4 to 5 years in the doldrums. We can only hope that a similar thing will happen here in Australia. As to Asia, well, the Chinese economy is probably slowing, but really it's slowing to a level of around, say, from 8% where it was 6 months ago to 7.5%, 7%, maybe 6.5% annual growth. This is still an excellent rate of growth, certainly not one to be sneezed at. So you'd have to say at the moment that probably the resource-rich states, being of course Queensland and WA, and to a much lesser extent South Australia, will continue to outperform. Here in Melbourne, well, I think the property market is due for a bit of a pickup, only because it's had so much bad news thrown at it in the past 6 to 12 months that eventually investors will look at the yields on offer, the fact that prices in certain areas have come off, and start saying, well, the stock market's very volatile, I don't know what's going to happen overseas, maybe the perceived safety of bricks and mortar will come to the fore. What about the Australian dollar? Now, this is important, believe it or not, because if the dollar stays high, and I think it probably will for a bit longer, although ultimately I expect it to fall, it means that inflation in Australia will be contained. Why? Because a high dollar means that imports are cheap. And we all know that Australians love shopping online, they love going overseas. If the Australian dollar stays firm for a while, it means that inflation stays in check. So for the time being, I think the Australian dollar stays pretty much where it is. Ultimately, however, property prices in Melbourne and Sydney and Brisbane and other parts of Australia are of course determined by two things: the willingness of banks to lend and of course supply and demand. There's no sign yet that the banks are really cutting back on home lending. So to sum up, the last year wasn't the best. It's very rare that we have several bad years in a row in Australia. I think things are going to pick up, and I'll look forward to your company next month at the same time for another financial market update for Hodges Real Estate. Thanks very much.